Today, we're going to be looking at the difference between remortgaging and a product transfer and when you should use either. Hi, welcome back to our channel and podcast. My name's Gemma, and here at WIS, we talk about all things relating to money, mortgages, and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Ifti joining us. And for those of you who don't know Ifti is a trained accountant and mortgage advisor who has been in the industry for over 11 years. He's also one of the founding directors here at WIS. Welcome back, Ifti. How are you?
Hi, I'm very well, thank you. How are you doing, Gemma?
I'm very good, thanks. So I feel like we get this kind of question a lot, and there's some people that also kind of get confused by which one is which. So I think today is a great opportunity just to clarify a few things. So starting off, let's maybe talk about what is remortgaging.
Okay, cool. So remortgaging is where, say, a lot of people take a mortgage deal, right? So it's a 2 years or a 5-year deal. So when your deal finishes, usually you do something called a remortgage, right? Because if you don't do anything, let's say you're paying 2% interest, you go on to the standard variable rate. Standard variable rate is the standard rate at which the bank lends out money.
And it's usually much higher.
Oh, yes, it is. Yeah, it's usually double or maybe even more than that, right? So to avoid that, people do something called a remortgage. So what a remortgage is, they look at the rates in the market, say they have with X bank today, and Y bank is offering a nice attractive deal. They will move to that bank while remortgaging their house, right? So that's kind of what it means, yeah.
All right, so then let's now talk about a product transfer. So what is a product transfer?
Okay, so product transfer is actually the technical term we use, but product transfer, in essence, what it means is, so your mortgage deal is coming to an end, but you're sticking to the same lender. So they will give you another deal, right, for another 2 years or 5 years. Technically, it's not a remortgage because with a remortgage, you move somewhere else. But with a product transfer, you stick to the same lender with a different deal when your deal finishes. So that's called a product transfer.
All right, now I think that we know that there's definitely some instances where it really makes sense for someone to stay with the current lender. Let's talk about what those would be.
Okay, there are reasons why people stay with the current lender. One is ignorance, right? Because they don't know that you can go to another lender. They think if they take a 25-year mortgage, you do get a 2-year deal, but at the end of the 2-year deal, you have to stay with the same lender. So that's what they think, right? Because they are not familiar with what happens in the market. So that's one of the reasons why people stick to the same lender. And some people, they stick to the same lender saying, you know what, I don't want to do paperwork, right? If you're sticking to the same lender, the paperwork is much less, right? So therefore people will do that. And the other thing why people will want to do is because they get a better rate, right? Sometimes they do get a better rate. So they will stick to the same lender, right? Because that's an incentive for them to stay, right?
Yeah.
So those are the main reasons why people will stay with the same lender. And a lot of people think extra paperwork meaning you have a whole heap of work to do, right?
Yeah.
It's generally not the case. Of course, there is some extra work you need to do, but it isn't a whole heap of work, right? So that's one of the reasons why people will stay.
Getting your mortgage online doesn't have to be complicated. At WIS, our website will help guide you through step by step. Our fully qualified advisors can help you get the most suitable mortgage for you. Then you can relax, safe in the knowledge that WIS are working in the background to get your mortgage approved. WIS. Online mortgages made simple.
Would you also say that another reason why people might stay or have to stay is more about maybe their income has changed or dropped or something and they actually wouldn't be able to get a better deal, so they would have to stick and get another product with the same lender?
Yeah, so that could be a reason why people will want to stay as well. Because if your circumstances have changed, right? Your income's dropped or whatever it is, other lenders may look at you in a less favorable way, right?
Yeah.
So the existing lender, because you have a track record with them, they may look at you a little bit more favorably. But again, it's one of those things, right? You probably want to get some advice on that if you have taken a pay cut or your circumstances have changed.
Yeah.
Because there might still be lenders out there who are cheaper, right? So don't assume, when I got my mortgage a few years ago, I was on 25,000 and now I had to take a pay cut because I had to stop working as many hours. So I've taken a £2,000 pay cut, so I won't be able to afford any other mortgage. So this lender will try and stick with them. So just don't think like that, right? Because there are lenders who sometimes give you 5 times your income, 6 times your income. Recently there was a lender who came with 6.5 times your income for remortgages, right? So those options are out there, right? So it's always best to consult somebody before making that final decision.
Yeah, so you would definitely recommend people still kind of review their situation, their mortgage before making a decision.
Definitely, yeah. Because sometimes, this is not always the case, but sometimes the current lender charges a little bit more because they think people like convenience, right? I'm not saying all lenders are the same, but there are some lenders who charge slightly different rates for product transfers as compared to remortgages. Their remortgage rates are better and the product transfer rates are a little bit more expensive, right? So you probably want to look at it. I give this example about the TV things, like, you have the Sky and the Virgin and all that sort of thing.
Yeah.
When you get those packages, the new people get cheap deals, but when you're an existing customer, you actually don't get those, right? So sometimes this happens in the banking space as well. They have their reasons for doing it. I'm not complaining, but that's what I'm saying. It's always best to review it.
Yeah, Ifti, you mentioned earlier that, some people shy away from, looking around for a new deal because they don't want the paperwork. Yeah. Now, if you use the same broker, say that you use for your original mortgage, do you still have to do as much paperwork the second time for the remortgage stage?
Well, there will be some kind of paperwork, but it will be minimum, right? This is where the confusion is, right? A lot of people think it's paperwork, right? But what the broker does is they look at your papers to see whether actually is it the right thing we are recommending to the client, right? The product transfer. So he has to make that judgment call, right? So that's why there's paperwork involved. It's not for anything else, right? Because we just want to make sure that we are doing the right thing by you, right? So we look at all the options before saying, yes, this is the best one for you.
But I think there's a bit of a misconception about the amount, because obviously when you do the mortgage the first time, there is quite a lot of paperwork, there is.
Yeah.
But when it comes to remortgaging, if it's with the same broker, actually it is less, isn't it?
Yeah, most of the time it is less, right? But, if you're trying to do some remortgage with capital raising or something like that, meaning you're borrowing extra money, obviously there might be a little bit more underwriting that needs to happen, right? So, and you might end up having to supply more papers, right? So, yeah.
Yeah. But for something straightforward, it might not be.
Yeah, it'll probably be a little less, yeah.
All right. So what are the factors then that you need to consider when comparing costs, would you say?
Okay, so you have to be very careful because this is the biggest problem we sometimes find with some of the clients, right? They come and say, look, my bank is giving me 1.5%. Can you match it, right? But what does that mean, right? You might have a 1.5% product, but your product fee might be £2,000. But you might have a product with another lender who is offering you 1.55%, but there might not be a product fee, or there might be £1,000 product fee, right? But that might work out cheaper. So that's something that you need to consider. And also when you compare, most of the time you get like legals thrown in from the banks, right? Or, valuations free, those things you have to take into account, right? And also you have to look at things like exit fees and various other things as well. So you need to take all this into account before you make that decision, right? So you can't just look at the interest rate and say, this is the best deal, right? It doesn't really work. You got to look at the overall cost.
Yeah.
Sorry, we as advisors, we look at overall cost. If you're taking a 2-year deal, which is the cheapest overall cost in that 2 years. Likewise, with a 5-year deal, we do the same, right? So look at the overall cost, right? So that's what we do in terms of cost analysis, yeah.
Yeah, and then we also find, even with the product fee, sometimes you can pay that upfront, or you can roll it into your mortgage and there's, then it will make a difference, won't it? The overall fee. So these are the kind of things that we can check for you to make sure you're actually on the best deal. Last question, will there be legal fees and valuations needed for your remortgage or product transfer?
Good question, because that's again a misconception, right? Because a lot of people think, if I'm moving lender, I've got to pay legal fees, I've got to pay valuation fees, so it's not worth it, right? Because they think, all this is going to add up, right? But guess what? Most banks nowadays, they throw in that as a free thing because they want, they want to attract customers from other banks, right? Because that's how they are successful. That's how they can be successful, right? So they want to, this thing. So as incentives, most banks today will give you free legals and they will also give you free basic valuation, right? So that's what's required for a remortgage. But sometimes they don't give you free legals, or They don't give you a free valuation, but they may give you cash back to cover that, right? So you might have to pay for the valuation, but they'll give you cash back to cover that, right? So they do a lot of things like that to keep the playing field equal, right? Because otherwise, with product transfers, you don't have these costs, right? But with this, you do have the costs, but the bank will pocket it out. There's zero cost here and zero cost here. Then you're only comparing the product fees as well as the interest rate that you're paying, right? So, yeah.
Yeah, and Ifti, I get asked a lot about whether they'd need a solicitor for a remortgage and a product transfer. So you get that question as well.
Yeah, quite a lot, right? Product transfers, no solicitor is needed because you're within the same bank. They have done the solicitor work a few years ago for you, right? So you don't have to worry about it. But whereas, obviously, if you're doing a remortgage, there is some amount of solicitor work that needs to be done. You don't have to do the whole thing, right? You just have to do some amount of work because you're moving your mortgage or a charge on your property from A bank to B bank, right? So that process needs to happen. So solicitor will do some work, right? They don't do the whole work, but again, it's nothing for you to worry about because quite often it's paid by the bank because it's free legals, or they're giving you cash to pay towards that, right? So it doesn't really cost you anything. So all that kind of happens in the background. There will be some paperwork for you. Maybe you might fill a form and send it to the solicitor or something like that. But apart from that, there shouldn't be too much work, right? And nowadays, most of the solicitors are online as well, right? There's something called Digital Move where everything is sort of on a portal. So it makes things easier compared to what it was a few years ago, right? So, it's not too strenuous for a person to do this, is what I feel,
Yeah, definitely. Would you say, I get a couple of questions as well about the legal fees and, can someone get their own solicitor rather than going with the bank's free legal? Is that something they can do?
Yeah, again, some people do that. It's down to them. If it was me, I'll use the free legals because I don't have to pay any money, right? But whereas some people pay that money because they trust their own solicitors more than a free legal solicitor because, with the free legals, free is not always good, right? Because it's free, right? So you just get services of a solicitor. But if you don't trust the judgment of the bank on that one, you probably can do it yourself. But the bank won't refund you the money, right? Because they're like, this is part of the package, right? You take it as a package or don't take it, right? So if you decide not to take it, you have to incur the cost, right? But if you get cash back, sometimes you have an option. Because I know a bank who does this, right? They say either free legals or cash back, right? So if you get the option of cash back, and if you think your solicitor can do a good job, take them up. And, take the cash back and pay them. That's what some of our clients do, right? So there's nothing wrong doing that,
Oh, thanks, Ifti, for some more great advice. I just wanted to let everybody know that this advice may or may not be applicable to you. So please do check with an advisor if you're not sure. And if you don't have an advisor, I will leave our WIS contact details below, as we are always more than happy to help. And as a mortgage is secured against your home or property, it may be repossessed if you do not keep up with the mortgage repayments. Thank you for joining us again today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.